Jobs suck, Fed is clueless, and the markets ignore it all. What's up, everybody? Welcome aboard to Bubba's Bottom Line, and it is Saturday this week, and of course, Kentucky Derby Day, and first Saturday in May, and here we are, and of course, through the week, we had a lot of data out. We had a market that closed lower on the week, no matter what we want to say. The market closed lower on the week, continuing the overall downtrend. But of course, on Wednesday, we had the Federal Reserve, and of course, they continue to tell us how great everything is, how great the economy is, and yet they can't raise rates. Can you tell me why that is the case? Why we cannot see rates get hiked? Now, again, I understand we'd like lower rates, but the real problem with the lower rate environment is that there is no liquidity for money for the average guy who needs the money. We don't get the opportunity to be able to borrow to start a small business. We have to go to predatory lenders to get money to start a small business. So rates can be zero. It doesn't matter. So wouldn't it be about time that if the economy is growing at the pace they say, if globally we're just flying away, that we should have higher interest rates? One might think, but one might not realize that the people that make that decision only understand theory, and they really don't understand how a market works, and they don't understand that you have to sometimes adjust your theory. But of course, they will once again blow it without doubt, and they will create a major problem because we're already approaching or in a stagflation environment. Inflation is going up. I don't know. They keep looking for this 2% target. I don't know. All I know is I'm spending a lot more money for goods and services than I was before. And I'm not making as much money as I was before. I don't understand, but of course, the geniuses will tell me why it is, but unfortunately, they won't tell me for 10 years of what's going on. And of course, we've got the interest rates trying to rise at the market environment. The treasuries are selling off. They did have a tad of a rally this week, but they are selling off. And of course, that doesn't mean higher interest rates. We've got the flattening of the yield curve. But let's just ignore it. We are the Federal Reserve. We are the smartest people in the room. So let's just ignore everything else that's going on, and let's ignore that we should quit trying to suppress the dollar and start raising interest rates and let the market start to adjust to it. But, then of course we have a jobs number. Now the jobs number sucked again once again. Now, you can listen to all the stories you want about how good or how it might have been better, and we're starting to see this, that, and the other thing. You know what I saw? I saw 164,000 new jobs. I saw a tick up in a tick down in the participation rate. Not a very good sign. We're not getting true labor participation. A tick down in the unemployment rate. So yeah, we had 3.9% unemployment. We're fully employed with crappy jobs. Isn't that great? Isn't it a wonderful spot to be in? Full employment with lousy jobs. Again, I don't know. I think we should go back 20 years and see what you were making then, see what you're making today. You tell me how good the jobs are here. So you've got an array of crappy jobs. You've got a lot of things going on. And of course, we ignore it. And you take into effect that we had a massive raise. You hourly workers, God bless you, got 4 cents an hour. All right. So now, in the last 2 months, you might be making 12 cents an hour more. So now we're almost up to be able to go to Starbucks for a Frappuccino and to be able to celebrate, okay, with our weekly increase. So once again, we continue to ignore the facts right in front of our face. Now, again, I understand that we've got to grow out of it, but you would think, considering that the stock market has gone up from 6,000 to 24,000 since 2008-9, that we might be in a little bit better shape today. And of course, we're not. Why? Because we've got too much BS going on, and we've got people trying to manipulate their way out of the economy, which brings us into the same story. Why is it so hard to let the free markets trade? What has happened to true capitalism? We continue to forget what capitalism is all about. And certainly somebody should be rewarded, and we should be rewarding entrepreneurs and rewarding people that can do a good job. And the way they get rewarded is their businesses are successful and they make money. But of course, we've come into a new world here, and we've got a lot of other issues. But as we look back at the week, what did we see? We saw the markets were lower for the week. Now, we had a dramatic rally from Thursday when we were down about 400 or 500. It turned all the way around, and then Friday morning, after the jobs, we went down initially, but then rallied about over 300. But at the end of the day, we're down for the week again. So we maintain that downtrend that we have been watching since January 29th. And there is no reason to expect that to change anytime soon. I think you continue to see a downtrend. Again, we are not in a great state here. And again, it has nothing to do with the market. Now it comes down to the markets are overvalued. Again, you can see this in the way the earnings have reported. When companies can't beat the earnings, now again, when you've already priced in 18, 19, 20 times worth of growth and earnings, you cannot continue to think that's going to be sustainable. You can try to doctor the numbers all you want, which is another thing that really pisses me off, but that's besides the point. So you had a market that was lower on the week, but the end of the week was unbelievably powerful. And if you got caught short, which is what we call the rip your face off rally, it didn't feel very good. The big story of the week was Warren Buffett bought, I think, 75 million shares of Apple, some ridiculous number. And of course, Apple soared when that news came out on Friday, and of course was up huge and making all-time new highs, pushing it to $940 billion. So it looks like they're going to be the first trillion-dollar company. I thought it was going to be Facebook, but of course it now looks like Apple, and now I guess all has been forgiven on Apple. But this is one of the things, we talk about this a lot, about analysts and the way they view things and their recommendation they get. They have no clue. And this is something that bothers me because most of them have an edge to try to gain an edge on what they're going to do. So don't be surprised if we find out that a lot of these people that were bashing Apple, forcing it down, didn't buy that stock into earnings, didn't already have a clue that Warren Buffett was involved. Again, I'm not saying, I'm just saying, right? In the meantime, gold broke down a little bit this week, came down below 1310, which was a key level. It did close above it on Friday, but I really need to see if it's going to continue to be able to hold that level. We were basically 1310 to 1365. So now we went down to 1302 and a little bit of a dead cat bounce off of very oversold conditions. So we'll see if it can hold. Listen, long term, I like gold. In the short term here, no surprise that we go under and go to 1280. Right now, we would have no position. Right. Oil, we called the top in oil last week, and of course, it consolidated all week, and then it exploded on Friday. Nothing these Friday rallies. I can't stand it. They want to torture me over the weekend. In the meantime, oil, again, I know everybody's calling for higher prices. I will continue to call for lower prices. I'm just saying that the formation in oil is what's called backwardation. July oil or June oil is the most expensive on the board going out 5 years, okay? That is not the right relationship. If you go back and look at June and July of 2014, you will see the exact same formation and the exact same pattern, okay? And again, what that means is that you've got some issues to deal with. All right, and it means that the price is being driven on fear. Now, could it go higher? Yeah, it sure could go higher. And I'm telling you that there's a lot of fear out there. Even a lot of us shorts are getting a little bit nervous. But I think that Friday was probably a little bit more of a short covering rally. We'll see. We'll see how it plays out. But again, you can bet on it that oil is going to get creamed here. But of course, it could take out the shorts before it gets creamed. That's always the danger of trying to play in the space. Bonds were a little bit higher on the week, but really not very strong, and certainly a natural bounce, which means that the 10-year was down around 295 or so. Again, I would expect to see the 10-year explode to the upside. The futures, we could break, the rates go higher. And I think once we get a solid week or two over 3%, I think that will also cause some great heartburn for the equities, because I think a lot of the fixed income people will decide that they're going to come out of equities because they'd rather have that 3%. And I don't disagree. I think that one of the problems we've seen is that because of the policies, because of what we do, the Fed is fortunately pigeonholed only one asset class that you can invest in, which is the equity market. Now, there's nothing wrong with equities. I own equities. I'm very happy with it. But at the end of the day, you need to open up all the asset classes so that they can all have a fair and equal chance and people have a place where they want to put their money. Right? If we look at, if we're looking at into some of the other asset classes, the dollar exploded. All right, and now again, we look for the dollar to go to par before year's end. We were swamped in that range, 88 to 90, 88 to 90, 88 to 90, and all of a sudden now we're at 93. It looks like the dollar's going to go higher again. More of the failure of the Fed manipulation trying to suppress that dollar, and that's one of the nicer things. And when you get some of these other markets, you can actually have the Fed not be as effective, because we're not talking about a stock. We're not talking about things that people invest in. We're talking about things that get actually traded throughout. So you can continue to see the dollar work higher. I think that's a very strong and real possibility that the dollar continues to work its way up. And that's something that we would continue to look at. And again, we're a buyer of the dollar on any pullback. I think that looks like the real deal. And it looks like we finally have broken out. And I think we go back to those much higher levels that we had seen. And of course, we're going to take a break here, but just when we come back on the break, we're going to talk about the grain markets. We're going to talk about the agricultural space and some of the other commodities, because again, the big trade war, the big tariff arguments are going on, and the team just got back from China. But at the end of the day, we believe that they should not have an effect. And after we come back from the break, we'll tell you why. This is Bubba's Bottom Line with Todd Bubba Horwitz, and we're going to step out of a break. We'll be right back with more of Bubba's Bottom Line. Hey, everybody. You know, we do have a program for high school investing, highschoolinvesting.com. Please do me a favor, go check out the curriculum. What we're trying to do is we're trying to raise a little dough, a little money, because I have supported this program for 7 years, and it's gotten rather expensive, and looking to see if anybody wants to help chip in. And if you'd like to come in and help us out, you can go to patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And help us out there if you'd like. And also don't forget to listen to the Bubba Show every day at 4 to 5 Eastern at libertytalk.fm. Now let's get back to the show. Welcome back to Bubba's Bottom Line. And of course, this is Todd Bubba Horwitz. And before we went to break, we did talk about what we thought about the trade wars and the tariffs. And I'm a firm believer that the biggest benefit here is going to actually benefit farmers and producers and everybody else, even if there is a little bit of a trade war tariff. One of the things we have to remember is that the Chinese need us. We need the Chinese, but the Chinese need us a lot more than we need them. Okay, they're going to have to buy our grain, whether they buy it from others, through others. Okay, the tariff talk is again, to me, can only benefit us if there's any problem to begin with. There could be some short-term pain, but as I look back at the prices for last week, and I look back at what's going on in the markets, I look at corn. Corn made new contract highs. Corn looks like it's going to the moon. Corn looks like we might be seeing a big market this year. So am I to believe that corn is rallying in spite of the tariffs and trade war potential? Wheat, same thing. Wheat did make a new contract high, but it certainly is popping and had a monster week to the upside. Friday had a little bit of a sell-off, but after something goes up 30 cents, you would expect to see a little bit of selling pressure. And it closed up for the week as well. The only commodity or the only grain that was under pressure was soybeans. We've been worried about soybeans anyways, and they did press up against the high, and they're really just still in a consolidation range. So what should I read from that? As the lobbyists and the crybabies tell me how bad all this is, the Congress, all the guys who want to get elected who create these problems, okay, and the lobbyists for their own reasons because they like to get the deals that they make. What should I believe? Should I believe the actual true price action, which means that we're substantially higher in grains from the initial talk of trade wars and tariffs, or should I believe what the lobbyists are telling me? I leave that question up to you. But of course, the way I look at it, prices are going higher. I don't see that. I think that's a good sign, not a bad sign. I think we've got a major commodity rally. We've been talking about buying in commodities for months anyway. So this isn't a new story. We think they're going a lot higher. And as we look at the meats, hogs came down and tested support and rallied a little bit. Not a great week, but didn't get hammered. And they're making a nice little W pattern. And of course, cattle was pretty much in consolidation. We thought that would happen because at the end of last week, they were both overbought a little bit. So again, these look to be the whole agriculture, grain space, corn, grains and meats, you want to buy on dips. I think we go much higher. I think there's a chance for a very big year here. And again, that's something that we want to always keep in mind is what is the potential. And I think we've got a huge potential. And if you tie that in with my thesis that the equity markets are going to melt down a little bit, that will bring new money in as well. So again, I go back to trade wars, and I talked to somebody about the steel and all the other things. This is all going to work itself out. I'm not, and I don't think anybody should be concerned. A, if you worry about it, there's nothing you can do anyways. But B, if you watch price action suggests that it's not going to have an effect. And that's, I think, is more important because the money always knows the answers. All right. So we think there's going to be a big commodity rally. We think that they're going to go much, much higher. Again, I believe that in the grains, we might see a big market. All right. And I think that's something that is really something that we want to look at. So as we look across the board at some of the other things, and we want to talk about a commodity, how about Tesla and their junk bonds? I guess Elon Musk had some wild conference call on earnings. And of course, what did they show? Once again, they're losing money. All right. Now, again, nothing against Tesla. I think the car is phenomenal. I'd like to buy one. Okay, I'm just not going to spend the money for one, but I'd like to buy one. But the real problem is they don't make any money. And not only they're not making any money, they can't produce what they say they're going to produce. They were supposed to get to 2,500 cars a week. They haven't been able to get there yet. Now they're saying in 2 months they'll be at 5,000. I don't know how that's going to work. Again, Elon Musk, a genius, very smart guy, learned how to use other people's money very well. I also believe that what you have to look for is you're going to see that the overall company, if they don't make money, what's going to happen? And that's it. I would think they'd be more likely a takeover or take under candidate. I will continue to try to stay on the short side of this stock because there is a lot of short interest. So sometimes you get these big rallies. But at the end of the day, it's hard to back a company that does nothing but lose money on every car. Okay. The oil markets we talked about a little bit earlier. Oil markets continue to go higher here, although we do think the top is in. Rig counts are up. Okay, we're producing more oil. So again, we go back to that formation, backwardation, contango. In backwardation, rig counts are up, production is up, yet prices continue to rise. Now, is that legit or is there a little bit of squeeze there? And we would say there's probably a little bit of a squeeze there. That's always one of the things that you look at. All right. Now, the wage growth, as we talked about, is anemic. Jobs report was brutal. All right. So I think one of the things you want to look at here is the overall outlook of the economy. Retail sales across the globe are down, okay? People are putting more money away or saving more or holding on to more because they're afraid to spend it. So when you look at that picture, how does it bode so well? What makes everybody think that the bubble that has been created by the Federal Reserve will continue to inflate? I think that's one of the problems that we're missing. I think, we've lost the capitalistic spirit. It'd be nice to go back into true capitalism and allow, again, this goes back to allowing the markets to work. And this is one of the things that I think that has been taken away is the true free market. Now, when you look into the cryptocurrencies, and as we talked about last week, we thought they were due for a big rally, and boy, they're getting it right now. I mean, you're seeing some major movements here, and you're also seeing a lot of information, okay, that from major players, JP Morgan, MasterCard, and others that are now seeing acceptance in these. And I think this is where you have to look at it. You've already got some major countries taking on the cryptocurrencies. So for my money, and again, I'm a small investor, poquito, I'm a very small investor in cryptocurrencies. I wish I was much bigger from a lot longer ago. Unfortunately, I'm small from not that long ago, but they are real. Okay, they're going to be around. And you can see there's even potential talk of a Fed coin. this whole process is really the financial revolution that I've said is going to happen for years, that there would be some sort of a revolution. This is it. The cryptocurrencies are a financial revolution because those people are tired of dealing with the type of business that the Federal Reserve does. Again, the Fed continues to try to devalue. We continue to have to make more money to live the same lifestyle, whereas the cryptocurrencies trade 24 hours. They're 100% free markets, okay? Now, some of them are going to go broke, but as we've talked about, we expected them to go higher, and they're going higher. If you look at Ethereum, it went from, I think, 500 to 1,200. Bitcoin was at 6,000 or so. Now it's over 9, almost 10,000. And again, I'm just saying that when you look at these, they're going to be real. There's so many things being developed in here and so many things that you can believe in. I mean, even Porsche is starting to use one of the cryptocurrencies. So when you debate on free assets and new asset classes, this is a new asset class, no different than the internet in the 90s, okay? That's why there's a lot of, bubble talk, and there's a lot of tulip mania and all these other things that we hear about. But when you look at the overall structure and what they're actually designed to do and what they're going to do, that should tell you that they are real and they are spectacular. And again, I would never tell anybody to invest a lot of money in them, but I would certainly tell everybody to take 1 or 2% of your investing money and get involved somewhere to understand it and learn it, because it's going to be around. If you remember from the 40s, when things changed, okay, it's going to be here. So you can either fight it or you can understand it, and it's just like buying any other type of investment that is not a 100% guarantee, which no investment is a 100% guarantee. And I think that's something that we need to, focus on, as we always do, is where's the best opportunity. Now, again, I wouldn't take all of my money, but I would certainly take a couple of percentage points and want to put it in that. And just a reminder, a lot of these family offices and a lot of these major advisors are already started using them in some of their portfolios. Now, it's not that I have all that much respect for those, but it does mean that they are being recognized. And this is the time, as you can say, that you might want, again, a small investment, limited or small risk. If it blows up, it blows up, figure it out. But that would be something that I would certainly look for, okay? And I think that's something that is really into where we need to go, so that you're prepared for what's happening next. And of course, as we look forward to next week, earnings season is just about over. We've got companies that have done okay. I mean, BUBBA had some great earnings. But again, I say to you that this is a bubble. We are very, very overvalued still, that we are going to test the lows. Now again, where are we going to be 10 years from now? Probably an average of 8% up from where we are today. But that might be 20, it might be 8. I can't tell you that, but I can tell you that there's going to be a sell-off here. I think I'm looking at a 30 to 40% haircut in this sell-off before it's all said and done, which really means that if you're a pure investor, all it is a buying opportunity. If you're a trader, it's a trading opportunity. Because remember, we know that if you just buy the markets and you buy good companies and you just manage them, and that doesn't mean micromanagement, it means just if something goes wrong with a company, you move it to another company, but not try to be too active, then the market should go up 8% year over year. So we're not perma bears. We're not telling you that the market's going down forever, but there are certain points in time that a correction is coming. And of course, my friend Danielle DiMartino Booth from Fed Up is also talking about some of the things that are going on in the economy that she's recognizing, and she sees some problems here. So again, I'm not telling you to sell everything. I would not do that. I would tell you to hedge what you own. And if you're a trader, look for some opportunities, sell into rallies. That's the way that we would look to play it. In the meantime, we're going to come back after the break with my commentary, a little bit about capitalism, a little about what's going on. And this is Bubba's Bottom Line. Todd Bubba Horwitz will be right back with more of Bubba's Bottom Line after the break. Okay, everybody. I'm in high school investing. I'm trying to educate our youth. If you'd like to help me out, help me help them, then all you have to do is go to Patreon, patreon.com/Bubba Trading. Make a small donation, $1 a month, $5 a month. Help us out. Help us help the youth of America so that our kids and our grandchildren cannot be stuck in this same financial crap that we see today. Then maybe we can actually educate some people to some true financial literacy that understand how markets really work instead of theory. Again, that's patreon.com/Bubba Trading. Also, don't forget to catch my show, The Bubba Show, every day at 4 to 5 Eastern. LibertyTalk.fm is where you get it. Check it out. And now let's get back to my commentary at Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. And of course, Todd Bubba Hortz. And of course, every week I give a little commentary. And, you know, I don't know. I'm so depressed at the lack of true capitalism in this country. And we start to hear, you know, it started with Bernie Sanders. And it's now the Democratic Party is getting so far left. And listen, I don't care about the politics part of it. But it started with the socialism views and where we need to go. And now one of the Facebook co-founders wants to give a stipend to every working American of $500 a month, which is about a $3 trillion in tax that they want to tax the rich, including himself. Now, again, I don't know why everybody wants to start to tax other people's money. You want to pay more taxes, pay more taxes. But nobody wants to pay more taxes. And why is it that somebody should be able to get a stipend? This is America. This is where capitalism was born. This is where we are allowed to go out and work. Now, I have no problem helping those who can't help themselves. I have no problem with giving to veterans, for example, if they need help. I have no problem making donations. But I don't want to be required by the government to be taxed so that people can not work or to get money to work. I think that is a very, very bad policy that we're setting. I think that when you start to talk about giving away free money for people that are not doing certain things, I think that takes away the thoughts of working hard and trying to be a creator and trying to get to the next level in your life. You know, nobody destined these minimum wage jobs to be full-time careers. And I think this is where we miss the boat on a lot of things, is we have people that want to continue. You know, Warren Buffett's another one. Let's tax. Well, the first thing is why don't we clean up the government first? Okay, we don't have to tax. You know, if we could audit the government, I guarantee you we could find money we probably wouldn't have anywhere near the deficit we had. So if we could audit the government, audit the Fed, I'm sure we could find trillions of dollars right there. But to want to always, why does everybody always want to tax the rich? Okay, why do the rich always want to say that they want to be more taxed? But I've never seen one of them write a check to the government. I've never seen one of them write a check to the IRS saying, "Hey, well here's an extra $1 billion because you're not taxing me enough." I think this is a problem, and this is, I think, one of the big things when I look at Hollywood. You know, all these people in Hollywood who want to give away, do they really give away? And they do give away to all their lawyers and accountants, in which they spend gazillions of dollars trying to avoid how to pay taxes, trying to avoid showing any real income. But of course, they want to come out and look like they're doing us a favor. So I say to this guy from Facebook, are you nuts? Do we really want to start this process? Okay, I mean, why don't we just have everybody not work and just let's continue to just inflate, and then we just won't have anything. I think that this is part of the Federal Reserve type of plan where they print money. So now others want to give it away, and I don't understand how anybody could think that would possibly work. The one country that it could have worked in was Finland. They have enough money, they run at a surplus, and they gave it up. Okay, and they've got plenty of natural resources. I mean, they've got it all. But where is it written that if I do well, that I have to give extra? Again, I don't mind paying my taxes. I don't mind doing anything to help the country. I don't mind donating to those who need. Okay, but unfortunately, in this country, there's a big percentage of those that are scamming the system that don't need, that continue to take advantage of it. And to me, that's a crack. And I'm not interested in giving. I want to give who I want to give to, not to who the government decides. The government has never proven to do a good job at dispersing anything. Just take a look at healthcare and Social Security. Okay? Take a look at any of the other government programs. They all stink, okay? Because they weren't managed and put in together properly. So at the end of the day, again, I'm not interested in paying more taxes to help put in a monthly stipend. I think that's, again, we're trying to get to socialism, and I think that is the worst possible space we can get in. We've got enough trouble with the way things are now. I think we need to return to who we were. We need to fix the things we've got and make it work better from where we are and get back to the original type of system we were in versus what we have created between the Federal Reserve and the overstated government. That is my commentary. That is the end of Bubba's Bottom Line, but I do have my Kentucky Derby selections if you happen to catch the show today. Audible is my pick to win it. I like Audible with my boy Jack, Bolt Euro, and Hoffberg. Have a great weekend, everybody. Thank you so much. We'll see you on Monday with Bubba's Daily Update. This is Bubba's Bottom Line. We'll see you on Monday, everybody. Have a great weekend. Thank you so much.